Everybody, welcome to TraderMerlin Show. It is your hump day. Wednesday it is. Yes, if you were like me, you were glued to Powell's comments today in his presentation. So that'll be pretty much the focus of what I discuss on today's show. Of course, I do have questions. A good one coming in about lumber. We also talk about gold, which took a nice little nosedive today. And of course, if you guys have any questions along the way, feel free to send those on in. Alex, good to have you with us. Hope your team's still doing well out there. Santosh, Jerry, Big Eb, Terry, Tom, Brendan, and Les. Brendan shows up and then left right away. I figured you'd love to just destroy Powell and the Fed, but we'll do our best to try to keep things balanced on both sides. Good to have you with us as well, Leslie. So I'll start with this picture here, and I love the comment from Harrison. He says, there's a problem with this. It looks like Powell's train is still on the rails. Well, if you listen to today's comments, and I listened to just about every word of it, I couldn't make it the full length, but you got through most of it. It is on the rails, right? His talk track anyway. And really, I mean, the big takeaway from the whole presentation was he was saying, look, we are going to stay very accommodative. And he didn't just say accommodative. He meant to say very, and then I believe he repeated it twice. So very, very accommodative, which basically means, as most of you will be here going on, they're just going to keep on pumping up this market any way they can. Now, of course, we all know that there's certain things that are starting to rise, which could be problematic. Now, we talked about inflation a little bit the other day. That will be a topic for tomorrow as well. I did get John O'Donnell to come on the program tomorrow, so he'll be our guest for tomorrow, which I'm sure many of you will be excited about that one. Big Eb says, now I was watching the Putin-Biden kiss fest. Yeah, well, was it as exciting as the Floyd Mayweather Logan Paul fight? I mean, that was just walking around hugging each other too. I want to start off by showing the dot plot here, and of course the dot plot is giving readings from the voting members of the Fed on where they think rates will be. And you notice that 2021, it's flatlined. So no expectation, even with this meeting, that we would see any raises this year. I'm pretty sure that was off the table for almost every analyst out there as well. But you look at 2022, and now you're seeing just a little under half of the participants seeing a rate increase, a couple of them getting up to over 50 basis points getting into 2022. Now, that's interesting because up until a week ago, almost everybody was saying no rate increases in 2022 and seeing a few of them in 2023. So this whole curve is really accelerated here, where you're seeing the likelihood there is now a much stronger potential that we could see rates increase in 2022. Remember, if you go back just 2 weeks ago, that was off the table. That wasn't even a talk track that we would have rates increase in 2022. We're going to go all the way to 2023 before we start to see that. So while we saw this market take a bit of a dip today, and let me bring up the S&P 500 just so you guys can see that. Here is your daily, and yeah, it took a dive, but it really wasn't that bad in the grand scheme of things. You look at the market down, less than 1%. At one point, it was down much more than 1%. We'll bring up a 15-minute time frame here so you guys can see. Had some pretty big swings, but you can see as he was having his conversations, making the announcement, sharp slide. I think that his comments that he did in the press conference afterwards really started to ease the fear of Wall Street a little bit. But I think when you read through the waves of how information was released, right away he said we're not making any rate changes. He says we've got a very strong labor market, and maybe I should just do this on a 5-minute time frame so we can kind of see how this might have progressed. Here's where he made the announcement that he's doing no rate increases. Things are going to stay right where they're at. He did cite inflation. He talked about some inflation risks. One of my favorite pieces about the whole inflation talk track today, I don't know if you guys caught that. He was basically saying, he said, inflation has run considerably below our 2% objective. Therefore, we feel it's appropriate to let it run moderately above 2% for some time so that over the course of time, it averages 2%. Not that, hey, we don't want it above 2%, just we want our long-term average to be 2%, which is kind of, for me anyway, almost a way of backpedaling a little bit. It's almost like saying, when the kids are away, I'm trying to come up with a bad example off the top of my head, which is probably not going to work well. But you tell your kids not to do something. Like, I absolutely don't want you to go in the cookie jar, and they eat the cookies. And they eat 1 or 2 cookies. You're like, oh, well, that's okay. I just didn't want you to eat all the cookies. Over time, you can eat all the cookies, but just can't eat them all in one sitting. Right? It's like you're already making an excuse for this mandate that you said, we want 2% inflation. If you say 2% inflation to me, that means 2%. If it's below it, we need to bump it up. If it's above it, we need to drop it down. Stick to 2. Now they're saying, well, it was much lower, therefore this was part of our plan that it can get moderately above that. And he has outlined right now we're at about 3.4%. And that's considerably higher than we would have seen if we had a 2% goal and stuck to it. So I thought that was an interesting piece. Back to the charts here as we go more in depth into what was being talked about today. Yeah, you talked about inflation risk. One of the notable things was the COVID vaccine again, or not vaccine, but the virus coming back and really, new strains was interesting. I didn't really see that being a change in his talk track. I mean, that's always going to be there. You always have to have a couple cautionary pieces behind you. One of the other things that I think gave the market a little bit of hope and enthusiasm, if you look at his comments about Fed purchases, because there was some concern that we would take off a little bit of the purchasing of mortgage-backed securities and treasuries, right? Taper just a little bit. He says, absolutely not. We are definitely going to maintain purchasing $80 billion a month in treasuries as well as $40 billion a month in mortgage-backed securities. So this obviously should be stuff that's relatively good for the equity markets, also good for the housing markets. Even though we had some mixed housing data, it still is overall pretty good, knowing that the Fed is going to be backstopping all of this. So as he was saying these things, you can see the market was responding very favorably, almost erased all of the losses in the S&P 500, really rallying up. One thing that he did talk about was just called the RRP, which is the Reserve Purchase Requirements. And basically what you're looking at here is the Fed sells securities to qualified members. We'll call those big institutions, and usually it's at an overnight type of process. The Fed sells them and they literally buy them back the next day at a guaranteed rate. They bump that rate up by 5 basis points. Not that big of a deal. It's only 0.05%. But that does show that they are already considering moving some numbers up and starting to raise rates to potentially combat inflation. And that, one of their arguments was to backstop it so that rates won't go negative, which I thought was kind of an interesting comment by Powell. That said, you look at that's the first step, right? How do we get to a full sprint? By taking one step. And to me, I don't see the Fed funds, increasing this year, but I am in agreement with kind of the this picture here where we have, I think, and this goes back to your comment, Big Ebs, of what's the difference between 2, 5, or 10. Well, if you're looking at this dot plot, what it's basically saying is the degree to which, how dovish members are or hawkish they are. And all of a sudden today, the Fed was kind of put on the spot and became considerably more hawkish than they were. Hawkish meaning that they're looking at a rising rate environment. We've been dovish for a very long period of time, and anybody on the FOMC who kind of opens their mouth about being dovish gets beaten up by bankers, right? And they don't want to hear none of that stuff. So it was nice. I wish I actually had the previous dot plot so I could lay them over each other so you could see the big changes here. What's noteworthy, and I think for everybody out there, is you can expect in a couple of years to have much higher interest rates. You notice that this dot plot, I don't know if you can see it clearly, but right now on the left side of the chart, you're at 2021, and everybody's saying we'll stay right where we're at. That's 25 basis points or lower. Right now, it looks to be about 0.6. 0.06. If you look at the 2022 forecast, there's 10 members saying stay right where we're at. You have 5 members jumping it up to about 0.4%, and then you have 2 members saying, hey, we're looking probably about 0.6. So, 0.2, 0.4, 0.6, it doesn't seem like a huge difference, but it is at least some measure of increase going forward. And if you look at 2023, the peak expectations by those voting members is over 1.5%. Looks about 1.7%. 1.6% for the Fed funds rate in 2023. That would certainly have an impact on our markets going forward, but I guess at that point, the Fed feels pretty comfortable and confident that we're going to have, again, an extremely strong labor market. And a lot of the words that Powell used, if you did listen to it, there was a lot of descriptive adjectives in there that were putting exclamation points. He used very multiple times throughout this presentation, like very strong labor market. We're going to be purchasing for a very long pay. Very, very, very accommodative. So it was nice to hear that talk track. So for those of you who are bullish on the markets, this is definitely a positive sign, but did you really expect Powell to say anything different? Did you expect him to be like, oh man, shit's gonna hit the fan. We are in deep, deep trouble here. Man, you better, I'd sell everything, go to cash, and get out of the U.S. I mean, he's not going to say anything like that. It would be great. It would be great if he did one time. Just one time I want to hear an FOMC chairman be like, man, you guys better just sell all your assets and get out of America. This is horrible. Just to see what happens. It's an April Fool's joke, maybe. Anyway, we saw that nice response. As you can see here, I'll run through the markets briefly just to give us an idea of what happened on that. All in all, they were down, but it wasn't down huge. The question from Pepe says, did you get out of your puts? Nope, still holding them. I have August, so I'm going to wait probably. We'll see what happens by Friday. I wasn't planning on riding these out for a long time, but I do think you're going to get a little bit of follow-through negativity where people are kind of trying to decipher what this raise in the RRP rate means, what his stance on inflation is, because he did cite quite a few things, including lumber, by the way. When you look at that price chart, it's kind of interesting to see how much that thing has been moving, and it's given up almost all those crazy parabolic gains, which I'll look at lumber in a little bit. I want to kind of keep staying on track with the Fed's dot plot and things like that. So here's what we have for equity markets. I'll start at the top. And again, this is including after-hour session, so it won't be your normal end of day. Bitcoin really took it on the chin today. Again, here's your daily of it. I'm just going to take our artwork off. As pretty as it is and what it meant to all of us that day that we drew it. We'll take that one off. Bye-bye head and shoulders pattern. But you can see nice little red candle on the hard red edge of this chart. You actually had a shooting star formation yesterday, followed up with a great follow through the south side. You know, the question is, does it fill this gap completely, which would bring Bitcoin all the way down to 37,300 and change, somewhere in that ballpark? Or is it just a short-lived thing before we end up getting it bounced back to the upside? We'll talk about cryptocurrency as an inflation hedge later. Interesting for me was gold. This is actually a viewer question, but I'll dive deeper into it. I'm going to keep it high level right now. Gold really accelerating. I mean, it was an aggressive sell-off today in gold, down about 2.36%, coming down into that area of demand that we saw that breakout from initially, going back into late April and early May. That yellow box you see on our screen, where it was between 1,800 and that low of that box right around 1770. So we had that $30 range. It broke out, great long breakout trade, and now all of a sudden we may come back and retest that zone as well. Okay, let's see. Let's go to S&P, which I am still short on the S&P. Nothing really technical noteworthy. It was just an aggressive move that we saw as Powell came out with his rate statement and then kind of bounced back up. So that was, I guess, predictable. When you look at a Fed announcement, and Unscammable's not here today, but it's funny. He says, you're kissing the devil. Well, I guess I kissed the devil and didn't get burned today, right? This is very normal of an FOMC announcement or Fed type stuff, and this is normally why I encourage people to stay away from it, because you get these big whipsaws. I'm a little bit more, I guess I'm a little strong in my opinion that Powell was going to address inflation today, and inflation has been on the tip of the tongue of a lot of financial people, and I thought that it would be a negative talk track, and I think it kind of was. He addressed inflation. He didn't use the word transient anymore. I think he got beat up enough for using that stupid term, but he talked about the fluctuations in it, certain things like lumber, and he brought up some very interesting points where we look at people were hoarding lumber because they saw the price of lumber spiking so aggressively. And now all of a sudden you're seeing these people who were hoarding it trying to unload. And all of a sudden, like I said, we're being lock limit down almost every single day in that lumber market. And it comes to the point of during that glut when people were stockpiling lumber and hoarding it because they thought it was going to be even higher than it was, do they eventually end up dumping on a market that this whole time has been producing lumber? So all of a sudden we get a huge supply glut of lumber and we get prices that go much, much lower, and then all of a sudden home builders spike because they're buying back lumber at cheaper prices. This is the whole supply and demand equation that is constantly in flux and constantly moving, and I'll show you lumber here in just a second. Let's see, moving up, that 10-year. Because of the announcement, you guys can see here, this is the price of the 10-year, and you can see it fell pretty sharply. What that means to you is the yields spiked today. Now, they were slowly drifting down, but all of a sudden we get this nice spike up in the yields. And let me show you the yield here real quick, because I think that looks better, and I don't trade the 10-year, but I love to look at the yields. Here's your 10-year, and we'll drop this down to, let's say, a 15 minutes. We get a nice perspective of what happened. There you can see we were sub 1.49. We were about 1.48 and a half, and now we jumped all the way to 1.58. So a tenth of a basis point jump to the upside. That's pretty big for one day. And again, I think that is signaling a rising rate environment. When he did the RRP increase of 5 basis points, then all of a sudden, people were going, oh, this could hit the broader markets, and we could see more interest rate increases here going forward. So that begs the question on this daily chart of the yield. It had been slowly drifting down, lower lows, lower highs. To me, that low may be put in now. The question is, do we come up and challenge this 160 mark? Do we get through these not all-time highs, the highs from the last couple of years, which are going to be right around 1.75%. We talked with Bill Addis about the potential for things getting much higher than that, and he said the chances look pretty good. We also will have Bill Addis on the program next week. It's either Tuesday or Thursday to talk more about that. All right, let's see what else I got. It's crazy that they continue buying mortgage securities and the housing market is going up. Yeah, I agree. But, you put this backstop on the housing market. For me, I think they shouldn't be buying mortgage-backed securities. I think that they should be completely out of that, because at some point when this housing market crashes, they're going to be forced to come back in and buy mortgage-backed securities yet again, and probably in big numbers as some people start to default on their mortgages again. So right now, as the housing market is so hot and just booming, not the right time for them to be lending a hand, if you will. If anything, they're kind of fueling the fire and pushing things up, creating that housing bubble even further. So I agree with you. I think it's crazy that they should be buying these mortgage-backed securities. Rising rates in time for the 2024 election. Yep, that seems about right. We should have that going on. Rising rate environment, and then we can have the whole, then we can all point the fingers at the other administration. Oh, well, this one had low rates, this one had high rates, well, this one did this, well, this one did... whatever. It's always going to be there. It'll always be moving up, always moving down. Let's see. Jerry says, Merlin watched the show yesterday, bought puts in the S&P after suffering a big loss early during the pandemic. Gutsy buck. It's not gutsy. It's just, I didn't... Okay, so when I say I bought puts yesterday, I'm not in 420 puts, right? I have 10 of the S&P, I have 5 of the NASDAQ, and... That's not that big of a deal, but it's okay. It's I wouldn't call it gutsy. It is doing what you do. I mean, it's kind of like it's the example for last year is I was riding my bike down as a kid, riding your bike down a steep hill, and you get speed wobbles, and all of a sudden you just eat it, and you end up with a lot of road rash. It shouldn't make you worried about riding a bicycle anymore. You just got to learn what not to do. All right, hold the handlebars more stable, or fix your rims so they don't get out of sync like that. Well, same thing in trading. It's not. Going short the markets, I have no problem that. Getting stopped out is not that big of a deal. Just last year, I went in a little bit over aggressive, but I told you I was being over aggressive when I made that trade last year. So good to have you, T-War. Good to see you. Let's see. We'll look at the VIX here, Batista, in just a little bit. I think we're done now. It's all climate change these days. China created that, right? All right, let's go back to our run through of the markets here. So I was on the 10-year. Again, obviously that is going to be seriously impacted by any adjustments that the Fed does to rates. We'll keep moving up. NASDAQ, where I've got 5 puts on right now. I was up a lot more on the day, but I think what happened near the end was nice. It's still drifting down in the after-hours session. Wouldn't surprise me to see more downside move. Right now down about 0.65% for the NASDAQ. Crude oil is one of interest. Obviously extremely volatile from the commodity side of things. Let's look at the daily. We had our first little pullback, but you notice that 72 mark. I didn't put these lines on today. These lines have been here for a while. If I zoom out here, I think I got to go to a weekly, don't I? Let's go to .w. You notice right where that thing bounced at, right where it should have bounced, right? We came up, we hit that 72 mark. You can see going all the way back into January of 2020. This is pre-pandemic. We had that real aggressive move to the south side there, and lo and behold, that's where it turned. Doesn't mean that it's done, all right? I'm still long-term bullish on oil, but if you're expecting there to be a pullback, that's a good spot. You guys remember we talked about this 66.80 mark, that $67 mark right here on this breakout. We talked about waiting, right? We had the symmetrical triangle, ascending triangle. We had that breakout. Looked good from the long side. But as you're moving up, you got to have a point where you say, hey, I'm willing to take some profits off, and 72 is probably the best spot for that. After that, though, let's go back. I think we got to go to a monthly on this one. We've already got a ton of lines drawn on this chart, which is great because it's not like I'm modifying as we go. These are other levels of interest. So you got 72, which is where we hit our head at right today. You also have 76, 81, and looks to be about 84 and change. I'll call it 85 as potential targets. But I heard some comments yesterday from viewers that were saying, I think it was you, Big Ab, saying $100 oil by the end of the year. Could very easily happen. I could see crude oil continuing to rise up here. It's funny, I don't drive very much. I actually just ordered a bunch of electric bicycles because I got such a screaming deal on them. I think it'll be here in July, and it couldn't come sooner because even the cheapest gas, I think my gas yesterday when I filled up my truck, $4.95. I was like, wow, that's sorry, $3.95. Excuse me, $3.95, not $4.95. I was almost $4. All right, 7 million barrel drawn in crude, yes. But you know what? Those numbers, the crude oil inventories, they're so unbelievably bad. I really stop. I mean, I bring them up for people because they like to see the data when it comes out. But I'll bring up here's the economic announcement for it, and just so you guys can see the numbers. So here's your crude oil inventories. I'll highlight it. I'll make it big for you so you guys can all see it bright and shiny. Crude oil inventories came out 7:30 this morning. You can see here they were at a negative $5.2 million barrel contraction. They're expecting it to increase to only 2.1 decline, which means things are getting better. It actually came out worse, negative 7.4 million barrels. So you're seeing supply become an issue, which of course is driving these prices up. What's interesting is even though we saw supply numbers change so dramatically on the crude oil inventories number today, take a peek at the price chart for the daily. You would think it's actually the other way around, right? You would think that this actually spiked it. Again, this is probably the buy the rumor, sell the news kind of thing. In crude oil, where you had a pretty strong move up as people were anticipating supply being an issue, and buy the rumor, sell the news. All right, and lastly, Russell 2000 was your best performer. When I say best, it really wasn't the best. I mean, it just didn't perform as bad as everything else. Here is your daily. I'll zoom out a little bit. As we've been talking about for months now, even though it's got a wide range, it's still stuck in this range. So I know someone messaged me asking about going long on Russell 2000. I say absolutely not. Not right now. Wait for that thing to clearly break out of that yellow box to the upside. If anything, you could be doing some short opportunities up here near the top of it with the expectation that things might drift back down to that lower part of that yellow box, which gets you just south of 2,100 on that price chart. Okay. I went through the markets. I went to the Fed. Was there anything else I wanted to get to from the Fed? Or I made notes to myself because some of it was interesting. He was cited the fastest GDP in decades, but we've also had the fastest decline in GDP we've had in decades as well. So it's interesting how these elected officials or appointed officials always point out the good side, but they didn't point out, you didn't hear Powell talk about, well, we're in the sharpest decline in GDP we've almost ever seen in history. Didn't go that route. Now it's, hey, we're seeing the sharpest rise in GDP that we've seen in decades. Always emphasize the good stuff. That was part of that talk track that boosted this market back up. I talked about mortgage-backed securities. They talked about supply bottlenecks, which I thought was interesting. Obviously, you can expect that with the pandemic, but now that most people are starting to get back to normal, those supply shortages, especially with the chips, should start to clear up, and all of a sudden things get back to normal. All right, that's it. So to me, that's the crazy train. I call it the crazy train just because it's just fueling this crazy market. They're doing everything in their power until that train comes off the tracks, right? That was the comment from Jerry. I think it was Jerry early on. Is that train coming off the tracks? Not yet. I mean, the data's not saying it is. We all feel like it is. We feel like it's crazy for them to do what they're doing, but it's kind of like if you do something. My friend Scott, he's a fisherman. And he loves going fishing, goes kayaking out on the lakes almost every day, it seems like, and goes fishing. There might be a point where, he's trying his normal lure that always works and just not catching anything. And next thing you know, he just gets lazy and he takes a piece of his bologna sandwich and throws it on a hook, and throws it out there and you're thinking, this isn't going to catch anything. And all of a sudden, you're limit up. It's for whatever reason, that's working. Even though it sounds stupid and you're like, man, it wasn't in the guidebook to use my bologna sandwich as a fishing lure. You're going to continue to do that until you're proven wrong. And right now, we haven't had the Fed been proven wrong. We're starting to see some inflation, but not hyperinflation. I think that was good by Scott yesterday. Inflation is without a doubt spiking and increasing, but is it outside the norms that we've seen throughout history? No, we've definitely seen spikes like this many, many times. But for me, it's more about the fact that we're seeing it increase so quickly. And if that rate of change, which I love to look at on price charts as well, if that rate of change continues with an aggressive pace, then we will start to see that inflation become a major issue. And that means that you could start to see, the dreaded hyperinflation word. Ooh, boy, they'll do everything in their power to fight that one, but that could be a result of it. That's an extreme. I don't think we'll get hyperinflation, but I do think we could see inflation get potentially into the double digits, which would be very scary for our markets going forward. All right, let me see what else I got for you guys today. I brought up this one because Pepe sent this in, and I think he's here today. He says, is inflation high like the one we are now seeing good for national debt? I brought this up because I'm going to ask this about John O'Donnell on tomorrow's show. And you guys know J.O. Loves the macroeconomics, inflation, debt. That's his bread and butter. He lives in that tranche, and he loves it. So I'm going to have him talk about that on tomorrow's show, see if we can get his thoughts on, the strategy behind maybe having high inflation. Like, is it a strategic play to forcefully have high inflation? All right, a couple questions. Lee, Scott said, you mentioned lumber with Scott yesterday. Do you trade it? If so, what should I learn before trading it? I do not trade lumber. I never have traded lumber. I don't know. I don't really trade thinly traded commodity futures. Not really a huge commodity futures guy. Like, I've traded corn and wheat and soybeans, but those are generally more liquid. You look at lumber, it's pretty thinly traded. Now, we already did some analysis of this, but let's go and look at lumber, which is really a jaw-dropping chart. It's pretty amazing. Check, it's down 14% today, which is crazy because it would have to have done multiple lock limit downs for it to drop that much. It's kind of weird. Normally, you don't see commodity drop like that. It's yeah, I found that. Let me actually look on this in a 5-minute chart and see if I can see, did it have multiple lock limit down today? Because I believe it did. It has to have. You can see lock limit there. Okay, so lock limit last night, and then it dropped down, almost lock limited, bounce, and then lock limited down again. Very thinly traded with lumber. Anyway, let's go back to our daily here and break this one down. It's coming right into a point. I think we actually pointed this one out. It's, if it gets down to these levels of call it 840, or maybe even the real target for me seems to be about 660, does that now all of a sudden make you a buyer of lumber? For me personally, no, because I don't trade it. And I guess, Lee, it's a great question that you ask, which is what should I learn before trading it? Before you trade anything, it doesn't even matter whether it's indexes or interest rate products or currency futures, always go to the respective site that is housing those futures and see what the contract specifications are. It was funny, I was listening to Sam Evans today. He had a radio show, not radio show, he does a webcast once a week, and I was just listening to it. And it was kind of funny. One guy was like, oh, well, they were talking about Bitcoin, and he says, oh, well, I shouldn't have listened to Merlin. And I was like, really? Why? What did I say? And he goes, oh, well, you said it to be $100,000. And I said, yes. And I still 100% stand behind that. I do believe $100,000 by 2023. If you recall, that was my number. Didn't respond back to that one. But we look at trading Bitcoin futures. If you trade the full contract, you're talking $70,000 outlay to trade one full Bitcoin futures contract, or you can go a tenth of that with the micro. So, you got to know the details of the contract specifications. Not only the contract specifications, like how much margin you need, but what are the trading times, because surprisingly not a lot of futures, or not all futures, trade the same time zones. So you might have one contract that, even though it's traded on the CME, for example, might be trading somewhere else, and it might be in those hours in that country. A lot of them, like lumber or cattle, have odd hours, so it's not even like they're the full trading day. They're broken up. So that's critical. And then the third thing I would say is really make sure that you understand the lock limits, right? You got to understand those lock limits to see where they are, how long they are, and each individual futures contract is going to be different. So Lee, I don't trade lumber. I love looking at it. It's been a pretty phenomenal chart, especially when you look at something like this. I mean, this does look like the price of Bitcoin. I mean, it's down over 50% in a month and a half. But it rallied, 200% in 6 months. So it's a very volatile commodity. I do see some gap filling going on here, potentially down to 660 would be a great buy point. But there you go. Let's see. Believable direction. Would you trade a crypto ETF? Well, there aren't any. You don't have crypto ETFs. This is another conversation that it needs clarity. So you look at something like GBTC or some of the other Bitcoin funds. There's a big difference between how a fund operates and an ETF operates. There's different settlement procedures. There's different requirements. There aren't any cryptocurrency ETFs yet in the U.S. market, and in Canada there are, because they're obviously much more understanding of new asset classes and aren't as scared as the U.S. is. We will have them soon. I would have no problem trading a cryptocurrency ETF. If you look at, Block is not a cryptocurrency ETF. BLOK is not a cryptocurrency ETF. These are, all that Block is an ETF that represents companies, that holds companies that are involved in the cryptocurrency space or have some tie potentially to the cryptocurrency space. Now, the reason that I find this interesting is if you look at what's inside of Block. So Block, in theory, should be a blockchain technology, right? So let me go BLOK. And if you're thinking blockchain, you think Block might be an ETF for crypto. You're like, oh, it's got Bitcoin, Ethereum, Litecoin, Ripple, all that type of stuff. No, none of that is in there. So let me show you here. I typed in Block. So this is the Transformational Data Sharing Amplify, right? You go to constituents. And you'll notice that there's a lot of big names here. MicroStrategy is, in my opinion, MicroStrategy is pretty much a proxy for Bitcoin. I mean, they're putting every single penny they have. But look at PayPal. PayPal's not a cryptocurrency. Square's not a cryptocurrency. Some of these are. Galaxy, not a cryptocurrency, but in that space. You see Galaxy Digital. Yes, they hold a lot of Bitcoin. They're miners. There's definitely mining companies in here. Marathon, that's another mining aspect. You've got NVIDIA. So while it may sound like this is cryptocurrency, it's not. Coinbase is probably the most cryptocurrency piece in here, and that's just an exchange. So you're not really holding anything in these, like Block ETF, or there's a few others that were big for a while. There is not an ETF, exchange traded fund, that holds outright crypto. There are on other markets around the world, but just not in the US yet. I'm hoping that we pull our head out of our backside with regards to regulation and get into a straight ETF. And I think that would be great for people to get exposure into the crypto markets without physically buying crypto. It's just unfortunately not here in the US market. It makes us look really stupid. Tom's right. He says call Block, GBTC, Mara, crypto exposure. Yes, that's really what they are, but you're not in crypto. You don't hold any crypto at all. Let's see. Hey, Unscamble, good to have you. Well, it wasn't really about being incorrect. It just is what it is, right? Today was a decent day. Let's see if I get follow through, because I didn't close out those positions. I think you're going to get a couple days sell off from this one, but who knows. Anyway, so great question from Believable Direction. Would I trade crypto ETFs? Absolutely, I would. When you look at them, make sure you understand the components of them. If the crypto ETFs do come to market, look at the holdings. A lot of them are going to be duplicated holdings. The second biggest factor, well, there's two. You have to look at the fees associated with them. So quite often you will get really high fees on these crypto or ETFs that represent exposure to the crypto industry, blockchain, etc. Some of those fees are like 2%. That gets really high. The other piece is going to be liquidity. So even though they may sound great and have what you want to buy in them, they may not be trading much at all, like some of those ETFs we looked at recently, those inverse ETFs of housing market. Almost nothing traded on those, right? So got to look at volume, got to look at the fees, and then find out what those holdings are and make sure it's what you want. All right, let's see. Eric, with the right spelling. Hey, Roland, I'm in a position on MyNew. Micro E-mini DAO, yep. Zero contract, fee charge. Let me see if I can even bring that one up here. Give me a sec, because I may not be able to bring that one up on this platform. Give me a second. I'm gonna have to go to a different platform for that one, Eric. Let me see if I can get to the end. NJ, Chelsea fan. What's your thoughts on MJ and IOTA? All right, so these are two totally different topics. One is talking about MJ, which is cannabis-related stocks, which I'm still a fan of long term. But if you look at this price chart, it really hasn't given you anything to be excited about, right? We recently broke above, and it really looks to me like a bull trap on the 9th of June, where he just broke above it, and that same day we came back down, and now we're going to be, potentially looks like it's headed even lower. So even though I'm bullish on the industry, I think at some point we'll get federal legalization of cannabis, and that'll spike it even more. I believe that that's really what you were looking at, is kind of the big spikes last year is because of the potential for legalization, and now it's just not a top shelf item, right? It's kind of fallen off the back burner with regards to overall discussion. Look, I still like it long term. I think you just got to be ready to hold something for the long haul and find the right buying points. I would not be buying MJ right now. It doesn't look appealing to me. If anything, I would probably hold out for it to get to those lows we saw in early May, right here, which is coming right back down in that demand zone. Now, if we come back into this demand zone, you got to understand this would be another attack at it. So the more we hit this zone, which I'll make a yellow box just so we can all see it, the more we hit this yellow box area, the more likely it's going to break and give way, and all of a sudden prices are going to drop further. That's the nature of supply and demand. So I'm not a big fan of MJ right now, just because the price starts telling me it's looking weaker. And if we get below 1830, you've got an unfilled gap that goes all the way back into January that's right around 15 bucks. And that would not be good to be holding that one. Weed maps. Isn't it great that you have to have a map that shows you where all the weeds at? There's your weed maps. Is this weed map? Yeah, weed maps technology. Not one that I regularly follow, but there you go. Big move up today in weed maps. I guess if you're a true stoner, you really need a map to figure out where you're going, because by the time you get there, you might be lost, right? Figure out where you're going. Yep, Jerry, I agree. $15 level on MJ. I mean, I hope it doesn't get down there. I mean, maybe I do, because I'm maybe buy some at 15, but I know a lot of people who are holding it right now, and I'm cheering for them. I think I can pull the same level off the YM. I have different futures accounts that are enabled here. So let me put your lines on here and see what we got. So you're going shorter term on this bad boy, but here is, I'm going to do that on the full contract. The numbers should be relatively the same. I see, what did you say? 34064. 34064 on the Dow 15-minute chart, huh? All right, so here's your 15-minute time frame. I'll bring the chart up for you guys. And this one goes back to Eric. He says, September contract, so I could probably pull up the September contract, but we'll just keep it there. 3410, 34013. So I need two lines on here. These should be relatively the same since it's a close contract. Yeah, I don't know if it's going to be. It's going to be a little bit off, I think, Eric. Where would be a good place for the stop? So you are, I'm in a position, I'm now, it's in our contract, 15-minute chart, short, entered, okay. So you entered at 1413, which is probably roughly here below these lows. Where would I put my target on this bad boy? I would zoom out, and the tough part on this is you got to look at the daily or even higher time frame, because we really haven't had lows put in for a better part of a month. And if where's your stop on this? You got to stop. So you have a stop that's going to give you 51 ticks of stops. So you need at least 150 for target, right? So that means you're going to be sub 34. So you're going to be looking at 33.9. Yeah, you're already in the money. So you've already got your 3-to-1 anyway. I would be looking at this area over here, these two low points that formed on the 19th and 20th of March, May. And I will go to, let's say, a 15-minute time frame, and it's going to take me some time to get there, because this chart, let me see if I think right in here somewhere. Let me go to the 15-minute time frame, and now I got to go show more data, because unfortunately it always defaults to a smaller period of time, like 10 days. I think we need to go back like 30. Okay, so I will scroll back and see if I see anything around that point that looks appealing. Come on. Okay, so there you go. Wow, I think I dropped my cursor on the absolute right spot. Okay, so this goes all the way back to the 23rd of May. You do have an area of interest. It's obviously small because it's in a 15-minute time frame, but it's fairly accelerated, right around 34,075. After that, there are a lot of really incomplete, not great levels here. One of the ones that looks the best to me is right around 33.94. There you go. Jerry says Willie would be a great spokesman for MJ. Well, I think he has his own line of rolling papers, or I think he has his own line of weed, to be honest. I think he does. All right, what time we got? I gotta, holy shnikes. Okay, so today, obviously the main topic was, and I didn't get this question for, let me do this real quick for Kevin. It says, was looking at gold, GLD at 170 as a good buy. What are your thoughts? We'll revisit GLD here because gold obviously took a pretty good hit today. The last couple days have been fairly ugly for it. And you mentioned 170. So let me bring up the price chart for the viewers out at home. And let's see where 170 lines up. Let's see where 170 lines up. I would assume, yeah, you're going to be just a hair above 170. But I like it. It was a gap fill origin. Had a double gap out of that one, so I love the gap up and go. The only real challenge here is you're looking at something that's aggressively selling off. You had a huge volume spike on it today, with over double the normal volume for gold. Long term, I am bullish on gold. I am definitely bullish on silver, and I think if in fact we get that inflation worried that people are talking about, and that does continue to escalate, then gold and silver would both be good buys. The problem with this, Kevin, if you're buying GLD at 170 and it breaks and does fill some of these gaps to go all the way back into late March, right around 160, what's your pain point? Where's your stop loss? Are you going to get out of it and jump back in, or let it go all the way back down and potentially hit those lows that we saw back in March, right around 158? So kind of tough. Eric, I don't look at options like unusual options activity. It's pure price chart for me. So if I look at this, Itaú Unibanco Holdings, Itaú Unibanco, I just love saying names like that, the European names. If I look at this price chart, I would be thinking nothing but short. I'd be looking at this going, I want to short ITUB. However, it's a $6 security, so that immediately removes it from my trading, so I can't trade this one. I can trade it, but I would never short a stock this cheap. It's just the risk reward is not worth it. But it has a double top formation, aggressive volume spike today, sold off. It still didn't close as low as I would like. Like, I'd love it if it closed near the bottom of the range. But honestly, Eric, it looks really bearish just from the last week. Certainly, you could make the argument that late May, early June, this thing was strong like bull Tatanka, but you have a little bit of hesitation. Then today's trading just looks at negativity for me. All right. Oh, Sue, bite your tongue, Sue. She says, I saw an interview last night with Willie, and he has given up on MJ. No, he can't. That's why he hasn't died. It's like Keith Richards, right? That guy does every drug under the sun, and he's invincible. I don't know if you saw the video recently, the Rolling Stone. I mean, it was recent. I think it was a year or so ago. Keith Richards comes running out on stage, playing his guitar, and he tripped on something and went. He didn't even put his arms out in front of him. Face first planted on the stage, gets back up, keeps on rocking. I mean, come on. If that happened to some other 70-year-old rocker, they're gurneyed out of there. That guy can't die. Willie's not going to quit smoking weed. That's what he does. That's who he is. It's like LeBron James going, you know what? I'm giving up basketball. I prefer table tennis. That's probably not going to happen. Okay. Anyway, he might. I think it's like eating a bunch of Twinkies, right? The more they said that you could have a Twinkie on your shelf for like 90 years and it would still taste fresh. It's a preservative for these guys. It keeps them alive. What did you trigger to buy gold and silver? I'm gonna wait on gold. So if you look back to the GLD chart and then we'll wrap things up. GLD. If you look at GLD, I think Kevin's okay with that 170 mark. But it makes me a little nervous because there's so much choppy stuff underneath it. If you look at what's going on market-wise, gold's a solid buy, a solid play, right? However, everything can remain irrational. I hate to always repeat that one, but it's so damn true. So I will wait. I'll just wait. I'd rather wait and miss something than jump on something too quick and take a big loss. So gold, I would wait for 170. If I did take a stab at 170, which I personally will not, I'd love it back lower. I really liked it getting down below. I mean, if I can get those lows back at 158, that's awesome. I see Jerry say 167 is a decent level as well. Yeah, and that's really where this gap gets closed. So that would be another good spot. I would take the 167 mark over the 170 personally. If you're looking at SLV, this is still holding, which, I mean, I feel like silver is stronger than gold personally, but and I have more optimism for silver going forward. So the thing with gold is I actually have better demand zones. Right now, I don't really have great demand zones on silver. There's a few. You got this 24 mark might be good. I like the 23 mark. As David, you can probably see the whole numbers, 23, 24, 25, all the way up. But if I were to have an interest, like Kevin thought about 170, you know what you could do, Kevin? Again, I'd say this all the time, but if you wanted it at 170, it might be a little late now, but you could sell the 170 puts right now and probably collect a nice amount of premium. And if it got there, great, you owned it, you wanted it anyway. So there you go. Tibor says 163 for GLD. Sure. Again, it's the same basic premise, right? You're like this little shooting star here that led to a big gap up the next day. Yeah, there's a few of those. But I like the 167. I like 163. There's a lot of good levels here. And bottom line is, any one of us in hindsight can say, see, we were right. I told you my level was great. If I wanted to be like Sam, I would just put levels on Seiden, by the way. If I wanted to be like Seiden, I would just put levels on every level, and then I would just boast to you at how great I did after it hit and moved off, and I would claim that I made a bunch of trades and made a bunch of money, but I don't do that. So, and regardless of what style it is that you choose, which level you choose, and me personally, I do believe there are ways to look at it and say this one's better than another. So, I think that the 167 mark and the 163 mark are both pretty good. I think they'd probably be better than the 170 mark on GLD. However, any one of those could work and any one of those could fail. So as long as we prepare to be wrong, to me, that's more important than preparing to be right. Preparing to be right is just watching the register move up and your account grow and that position do well. If you're wrong, you got to stop yourself out of it before it continues and goes the opposite direction that you intended and eat up a big portion of your account. All right, let's see. All right, let's get to it. I'm going to wrap up. I got some things I got to take care of. Here's what we have for mañana. I thought I had it up here. Here is your activity for tomorrow. And erases, yes, exactly, Jerry, yes. And if it erases if it goes through the zones that I would have drawn, then I will delete those zones and pretend it never happened. Yes, that's the Sam Seiden strategy. It's awesome. Oh, the paper trading prince, isn't he? If we look at tomorrow, you got Philly Fed Manufacturing Index coming out. These numbers have been dropping. I don't really focus on the Philly. I mean, I watch them when they come out. More important for me is the Empire State, which came out earlier, and that one dropped significantly, right? It's not really looking good for manufacturing, even though we're coming out of this. So the previous number for Empire was much lower than expectations. I'm kind of thinking the Philly will be as well. You also have unemployment claims. The good news is we're drifting down, we're drifting down, we're drifting down. We're getting back towards that, call it 250 to 220 average. Expectation is 360 for tomorrow's reading. That's an expectation of a 16,000 job unemployment claims drop. We had that huge number on crude oil inventories today. We have natural gas storage coming out tomorrow. That's at 7:30. And then if you're trading the Japanese yen, tomorrow night after we do this show, you'll see a rate announcement that's tentative. Right now, nothing concrete, but it's expected to happen tomorrow night. If you're trading the British pound, I know we got some from across the pond here with us today. That will be tomorrow night, like very late last night, tomorrow night is going to be your retail sales numbers, and they're expecting a huge pullback in retail sales in the UK. All right, guys, that's going to do it for me. John O'Donnell will be my guest on the show tomorrow. We're going to talk macroeconomics, talk inflation, and who knows where the discussion goes with J.O. Haven't had him on in some time, so I'm excited to get that guy back on the program. If you have a question for John O'Donnell, email me. Email's on the screen right here, TraderMerlin@gmail.com. You simply send me a question there, comment, feedback, whatever you like, and hopefully I'll get to it on tomorrow's show with John O'Donnell, as I like to call him, the ambassador of opportunity. All right, guys, that's going to do it for me. Thank you so much. Have a fantastic day. I'll see you tomorrow. Take care.